Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is October 7th, 2024, and we're of course looking at Bitcoin as we usually do. And we can see that there's some interesting things going on here on the daily. Bitcoin has gone back into a compression here on the daily time frame, and this is neither bullish nor bearish. So I do want to kind of call out that I've seen a lot of very bullish takes. I've seen a lot of very bearish takes on this particular price action, especially on the rejection of the upper first standard deviation here on the daily or right around it, and Bitcoin closing back below the basis band, which is the 20 simple moving average. Now we're going to talk about a few things as it relates to trend. We'll then get into support and resistance. We don't really need volume right now, but let's go ahead and kind of evaluate what the trend is currently. Currently, we are still in a daily uptrend. So we do have the last closing higher low down here at 57.5, with the close open coming in at around 58,200. Now we did get a little bit of a pit stop and sideways price action, a little bit of a swing higher low trend in here that was broken. That's not as significant as Bitcoin putting in this higher low right here. So this is actually going to be the criteria for trend right now. Any closures back below last Thursday's low at 59,824, and this would break this particular uptrending structure. Now, yesterday's rejection, is a little concerning for the bulls here. I will say that. So the criteria for continuation back to the upside is essentially, we saw Bitcoin test around this $65,000 high area. The close coming in there at 64,250, with that $65,000 high coming in right there that was broken. That did help break this structure's uptrending areas there of interest as it relates to support and resistance, but it ran right into a big area of overhead resistance that we'll look at in a moment here. Now again, getting back above and testing that area was something that we were looking for based on Bitcoin setting this higher low on Friday. So when we last spoke, I did talk about over the weekend we need to see Bitcoin push up. And, Saturday, we got a little bit of a doji candle here. And then Sunday, it did push up. Got a decent close on Sunday. Got that continuation into very early Monday. And then a rejection back down. Now, to paint this as a lower high, which would be a little bit concerning for the bulls, but wouldn't really mean much as long as this low is held. So we'll define the criteria for painting a lower high as it relates to this higher high structure up here, with the close coming in at around 65,800 or just shy of it, and the wick high there coming in at 66,550. If we are going to see a lower high painted, it's going to be on closures back below around 61,800, and you might notice that that's this close open over here. So right around 61,700 to 800 or so. Anywhere below there, that would paint this as a lower high, and then eyes on this higher low. That would be a structural break with a trend reversal already in place. So lower high, and then take out this higher low. We would already have the lower high, lower low structure in place. That would be indicative of a trend reversal, not a complete trend, but a trend reversal setup. As it stands right now, again, as long as we see closures above 59,824 or 825, if you like, it's very close to that, then all good. It can chop sideways, it can go down there and even swing it, as long as it's not closing below it, good to go. Now, swing structure notwithstanding, if we do get a swing lower low, that would be indicative of this, maybe trying to head back down to the downside, but realistically, we wouldn't be looking for daily continuation in terms of closing structure unless we see a close below 59,824. So again, if we're going to see a high painted on the daily, that would come on closures below around 61,800. And then we do have to pay very close attention to that 59,825. So that would be what we need to look out for trend. Now, in terms of support and resistance, we can come over here and throw on our accumulation distribution zones. can see that, Bitcoin went up and tested our area here at 63,800, drove up to that $64,000 and nearly to that $65,000 high wick over there. It did get front run around that area. Of course, that's also, you can look here at yesterday's high. Now it's still Monday for me, but the Monday candle high did really test right into this order block before the big drop down of $49,000. So, significant area of resistance. And this was a rejection of that pivot zone, which was retested very recently in the last 2 weeks or so. So that was the Friday before last. And, this is not that concerning. I know a lot of people are concerned. Realistically, if we do see the bottom side of the recover zone at around $60,000 dropped, obviously, then we have to look at that wick low that I was just talking about at 59,825, anywhere below there. And the top side of the risk zone is back in play at around 58.4. And realistically, that's where we got to then look for this higher low structure over here at 57.5, anywhere below there. And I would entertain moves down to the bottom side of the risk zone, top side of the danger zone at 55,850. Of course, that's this close open of the second major downtrend of this entire range here. So anywhere below there, eyes on that actual wick low over there at 53.5, which was a front run of our target one of distribution between 53 and 50. And technically anywhere below 53.5, I am looking for this low to get ran. This is the deviation downtrend. Of course, there is a swing downtrend here, but on a close, it's the deviation closing downtrend. Actually, it was a completed downtrend. So, but it wasn't completed until we put in this lower high and then higher low structure, which was a reversal right back to the upside. So we're just getting sideways chop at the moment, and that is being reflected in the bands. But I do need to say that if price does begin to drop, 59,825, 57.5, and then head down to 55,850, anywhere below there, 53.5 down to the wick low of this move at 52.5 is fair game. Any closures below there, and I would expect this entire target one of distribution down to the wick low at 49K to be tested and possibly lower. Into our target two of distribution between 49 and 45.5. Essentially, that's the bear market lower high from 2022 at 45.5 to around 48,240. I said around, then I said the exact number, but that, is essentially a zone between 45 and 49. Now, this was the ETF high that got spiked. That's from back in January over here. You can barely see it on the chart there, but you get the idea. Back to the upside, as long as Bitcoin's holding this last low, that at that 59,825, I would look for now the wick to beat now is Monday's high, and that's at 64,470 or so. So basically 64.5. If we start seeing lower term timeframes closing back above 63.8, probably looking at that wick getting tested. Anywhere above there, I'd look for 65 to get directly tagged to the bottom side of the pivot zone at 65.5. Of course, above there, it's kind of a range between that and 67,272 at the top side of the pivot zone. If you haven't watched my videos before, this is the first major lower high of the range. This area acted as resistance on the daily on the way back up. Now, you might be saying the first major lower high, there's two lower highs right here, Landy. Yes, but this was in the context of an uptrending structure. Then we got the structural trend break to the downside where 59.5 was tagged before spiking back up to create this lower high at 67,272. And then it raced down to 56.5 down here before reversing after putting in this lower high, which is the bottom side of the pivot zone at 65.5. That was a front run of the prior cycle, the first high at $65,000 on the macro scale. So monthly time frame, weekly time frame, daily time frame. Put in the reversal there, found 67,272 as resistant initially on the daily, impulse through it on one daily candle. Not really an impulse, I said that wrong. But every Elliott wave person is going to cringe when I say impulse. But we had a nice lower term time frame impulse up to basically test these lower highs right here at around 71.5 on a close, 72 on the double top there. But what was holding it up? Well, we see that 67,272 to 65.5 was trying to hold price up. we see that of the second major downtrend of the range, the first major lower high there is between around 68 and 70. It's technically 68.3 to 70,200 or so. I call it 68 to 70. Once that first major lower high was put in, where did it sit? Sat right on the 67,272 for a couple daily closures here. Came down, retested it as resistance, tried to hold 65.5 before dropping down and putting in another major low before a pop-up that's kind of defining our recover zone here. But either way, point being, that's above 63.8. Look for Monday's high to get ran, right? So at $64.5 to $65,000, then up to $65.5 to $67,272. Anywhere above there, we're looking right to this first major lower high zone that you see. We put in a double top on a close. So we went from double top on a swing or wick basis to double top on a close with that higher high. So essentially 60,000 to that $70,000 wick high. That's the run the highs zone. Above 68 to 70, I'm looking 70 to 72 over here by these highs. And then above there, I'm basically looking at the all-time high and higher. That's pretty much it for support and resistance stuff. If you've watched any of my videos, this is probably pretty well beat into your head in terms of these zones of interest. Let's go ahead and turn back on the Bollinger Band set here. This is how we're measuring volatility. In this case, we're seeing volatility contract. This is a 20 simple moving average here, the basis band. And then we have first, second, and third standard deviations to the upside, first, second, and third standard deviations to the downside. We also see that BBWP, which is the metric that I'm using to measure volatility of price as it relates to the bands. Now, this is direction neutral. If we were to get that drop below this low here at 59,825, that would put Bitcoin below the support here at around that 60,000 to 60,300 as well. It would also be under the lower second standard deviation. If we got closes under there, that would be expansion down to the next levels. I would look right down to, guess what? The lower third standard deviation. And that happens to be right at the top side of the risk zone here at 58,400. Now, usually when you see that aggressive expansion, then we get the bands really spreading out. Any closure subsequently under the lower second would dramatically increase volatility on the daily, and we'd likely be looking down into the bottom side of that risk zone, or at least somewhere in between that 55,850 to that 58,400 initially. Anywhere it could continue to expand if we begin to see that breakdown. Now, to the upside, if Bitcoin can recover the basis band on the daily, that would be good. It's likely going to end up around this 63,800 by the recover zone either way, even if price drops off. We likely see it continue a little bit and then swoop down if price was to head down, especially on expansion. But if we see that recovered, essentially I still need to see 63.8 closed above on the daily. Of course, I need to see above the wick high here and the upper first standard deviation, which is right below $65,000. So we have 64.5. Upper first is at 64,700. I still need to see $65,000 closed above. If we don't already see a test up to 65.5, any closures back above there, and I would look to the upper second, which is right around the highs here at roughly 66,250, kind of splitting the difference between 66 and 66.5 there. Above there, I'd be looking for expansion up to 67,272. The upper third would be fair game. That's right in no man's land between 67,272 and around 68.3. I said that backwards. 68.3. So essentially, I'd be looking up to $68,000 to $70,000 here at the run the high zone. More aggressive expansion would push it back to the highs, 70 to 72, and then above to the all-time high. So I do like that I'm seeing compression in a reasonable area. Hold 60K, that's going to be good for the bulls. Drop it, not so good for the bulls. Looking for things to come back down and retest the lows, essentially, somewhere around them. We'll gauge it day by day. If we do start to see any closures back above the upper second, especially the pivot zone, start getting above that 67,272, 67.3 area, we're looking for price to go test 68 to 70 and above, and that would look pretty good for the bulls. As it stands right now, this is neutral. No structure has really been broken outside of swing structure. If you're going to count this consolidation as swing structure, some do. But yeah, I'm not that concerned about it right now. Until I see closures below. If I'm bullish, I'm not that concerned about it. If I see closures below $60,000 and I'm a bull, I would be concerned. If I'm a bear, I'd be thrilled. Especially as most bears are technically just bulls in disguise, trying to get lower prices on Bitcoin. All right, so let's go ahead and take a look at momentum on the daily. So momentum actually looks good. So we have a fresh turn up in momentum. We even have a green dot on our DMI. So I'm not going to talk about DMI. That's something different. Maybe a different day I will get into technical analysis indicators and tools. But, I want to get through kind of the basic series that I've been putting together in the background for trend, support and resistance, volatility, and momentum. My 4 keys to analysis that help you make informed trades and you can build a trading plan around. In this case, 60,600 is going to be the number to keep above. Bitcoin's trading about a little less than $2,000 above there. So looks okay today. We'll see what it looks like on Wednesday when we talk again. But that's encouraging that momentum is pointed to the upside. Of course, Bitcoin is essentially getting that continuation drive. Pretty much target already met. As I'd mentioned on Friday, it's kind of when you see a continuation drive, it's going to test somewhere around its highs. It did fall quite a bit short. Doesn't mean it needs to test the 66,550 high, but somewhere around the high side structure, which it did. It tested some of the previous high side structure that was broken at $65,000. Could it test back up? Sure. I'm looking at the contraction on the daily. If it when you see contraction on the daily, let's talk about this for a second. When you see contraction of Bollinger Bands on the daily, it's more likely that as we see the contraction, go on like this, that these areas will initially act as a minimum lower term time frame resistances, especially powerful where they line up to the upside with horizontal support and resistance. If it's not lining up directly with my zones, you just look left and you'll see all the confluences like this close open right around the upper first. That was tested. To the downside, you'll likely see first pass in the lower term timeframes where the areas of volatility on the bands line up or the standard deviations on the bands line up with horizontal support and resistance, and around a low, likely going to get picked up in the shorter term timeframes. Likely, not always, but likely. Then we come back to it when we see closures below the lower second, which would also be a breakdown right around that low and losing a major area of support. Into the upside, breaking above a high, we'd be looking for expansion up to the next area of overhead resistance. So that's kind of how we take a look at that. They're not static, so they do move intraday ever so slightly, and they will move more dramatically in terms of expansion to the upside above the upper second or below the lower second on closes. Not on wicks, but on closes. So that's pretty much all I got for the daily. Let's take a look at where the simple moving average is. 63,250 or so is the simple moving average here. About $1,000 away from that right now. Where is the midline? Scale midline is at 62K. So we've already seen that area tested as well, but that's kind of the range that it's playing in is between the midline and the SMA here on RSI. The SMA is a 12-period moving average. You can add that indicator to any chart if you like. The bearish control zone is 58,175. So that would be essentially right around the top side of the risk zone, just slightly below it. Realistically, if it's testing the bearish control zone, it's testing in and around this low right here at 58,200. So on a close, and then that 57.5 on a wick basis, if it's testing into the bearish control zone here. Now the bullish control zone on the other side of that is at 65.5. So we have confluence with this bottom side of the pivot zone right here. So again, all just about confluences, and things are lining up nicely there in terms of confluences for major areas, even within this current trend. Let's go ahead and take a look at a few other things here. Let's take a look at the 2-day. The 2-day is still headed down in terms of Stoke. We do have higher low structure in place on a swing. Now, this is technically a closing higher low, but I need to see it closing back above this Tuesday, the first candle open, and that is at 63,300. So, and then preferably above the upper first, you see the Bollinger Bands coming right in there to go test the pivot zone all the way to this high again and higher to the upper second, which is right at 67,272. Now, this is going to be closing with today's Tuesday candle. Now, I'm still living in on Monday here, but the Tuesday candle is open. Back below the basis band's going to, we're going to see Bitcoin test the bottom side of the recover down to this 59,825 area. Anywhere below there, it's fair game down to that daily area at 57.5 and the top side of the risk zone at 58.4. So about $1,000 range between the lower first and that area. But you can see that this is kind of set up in a range. Lower second's at the lows. Upper second is right around some important areas of support and resistance that needs to be broken on the 2-day time frame. Let's look at this momentum indicator, though. Momentum indicator is showing $66,000 needs to be closed above on the 2-day to turn this back up in the context of the bullish control zone. Otherwise, it's going to tick down. It will remain in there, and we'll talk about this again on Wednesday when we see it, as the 2-day candle will still be open, and it will close. It'll be, depending on when I talk to you Wednesday, if the Thursday candle's open, it will have 24 hours to go still. But yeah, so this new 2-day candle will open on Wednesday at the close of the Tuesday candle. So let's look at the 3-day out of curiosity here. I'm wondering where we are. Yeah, playing out a bearish hidden bear div and just turned down within the context of the edge of the overbought zone here. 64.5 would turn that back up. The 4-day still pointed up on closes above 60,800. 5 days pointed up on closes above 57,800, almost 900. And the weekly is what we're going to talk about next. Weekly is going to be projected to test in and around the bullish control zone of a regular Stoke. This is not a Stoke RSI. This is measuring close over close price action, not the velocity of RSI. So in this case, closes above $55,000 essentially would look good for the bulls in terms of pressure to the upside on the weekly. What I will tell you, though, is that the 2-week is still pointed down, the 3-week is still pointed down, the 4-week is still pointed down, the monthly is still pointed down, the 2-month is still pointed up. So we've got a lot of intermediate time frames, especially the monthly. We need to see a monthly bullish reset. So the close of the October candle, we need to see closes back above 65,800 or so in order to see this turn back to the upside and get a bullish reset. I wouldn't be worried, to be quite honest, as long as Bitcoin's sticking around the local range and holding the lows, especially above 53.5 on a close. Then I would say, look for this to, get a more attainable number coming into the end of the month. I mean, it's not far from there anyway for Bitcoin. But, maybe it starts heading down to, mid $60,000, maybe where Bitcoin's trading right now and lower in terms of its momentum pivot. And then we get that nice sweeping bullish reset, kind of like what we saw from 19 into 20 when we got the first signal that things were going to head down back in 2019. Of course, this was the March of 2020 dump off that was associated with a particular illness. And really, it wasn't even the illness. It was the shutdown, which caused the markets to go haywire all around the globe. And then boom, right back to the upside. And then we got our spooky ghost character there that I was drawing all over the charts when it was developing. Yeah, I would look for, another kind of spooky ghost, right? Just a little bit higher eventually. And Bitcoin, resetting the monthly in a bullish manner and heading back up to the upside here. Now, I will say that we got to look at the weekly because we got to look at a few things on the weekly. We're going to get rid of the accumulation distribution zones, stuff like that. You can see this tight consolidation on RSI. It's going to break out at some point, right? Many people are very bearish on that, thinking it's going to break down. But in this case, I mentioned this last week, but the weekly setup in a range. Drop this low, lower second, and right around the low side structure here at 53,800, especially on closes below, then on the daily below 53.5. As we have not seen any closes below 53.5 on the daily down here, nor the weekly. I would be looking for continuation down to test the lows here. Of course, maybe a price replace band down to 50K at that lower third, and then we see expansion down further. That's where we would start targeting additional structures over here. Target 2 and below at target 3 of distribution. Not relevant to talk about right now. What I will say is I mentioned that on Friday that this was not what bulls wanted to see. Yes, this was a trend break, so we broke the lower high at $65,000 on the close in the week prior, with that high at 66,550. But that the last week's candle was not a good look. If it was going to close anywhere below $62,566, we were looking at not just a swing high being painted, but an actual high being painted. Now, of course, this would be a higher high. And one of the things that I've talked about, because the structure is so screwy on the weekly, so we've got higher high, higher low, lower high, lower low, lower high, lower low on a swing, but higher low on a close, lower high, higher low on a swing, but lower low on a close, and then we have a higher high. Well, what this essentially means is because we have the higher high, I need to see higher low structure as it relates to this last closing low and wick low or swing low. So that's 52.5 to the close open at 54,800, almost $55,000. What I will accept in terms of structure is a higher low swing, like this swing high at 66.5 rather, and this swing low at 59,825, and then if it can break this high on a weekly time frame at 66,550, that is now higher low swing, and I'd look for continuation back to the upside to the highs here and higher. Or I need to see a closing higher low. So price come down and put in a closing higher low. So essentially what I need to see from here for the bulls, is we've got this higher low swing, but lower low close as it relates to this closing structure. So what I need to see is this here on a swing basis or something like it, right? Or I need to see it come down and like paint like a closing higher low structure. So essentially we get, candles that paint the high, it's in, and then it comes down and paints some sort of a closing higher low structure and then heads back up and breaks this high here at 66,550. That's where I'd look for things to really start getting rolling. But I would accept swing higher low structure as well. So where it doesn't paint the high, and then just, so it doesn't actually lock in that high and closes below 62.5 or so, which, it's trading below right now. But for this week's candle, it has to the wick low to play at that 59,825. But if it doesn't close anywhere below 62,566, and then this, ends up being the swing, or maybe there's a swing lower, but it still continues to close under there, then swing higher low structure is valid as long as it goes back up and breaks 66,550. That is what I'd be looking for next for the bulls. Otherwise, it turns very bearish, and we are looking at this low again and lower, which, this would be a deviation or a bearish, retest, a bearish deviation, if you will. And we'd be looking for lower prices, at minimum back to this low at 52.5 and lower down to 49 and possibly opening up some deeper targets. Let's go ahead and take a look at some fundamentals, and then we're going to wrap this up. Let's go ahead and take this. This chart is blindingly white, so bear with me. I'm going to switch over in 3, 2, 1. All right, so we've got 42.2 is going to be the lowest cost to produce Bitcoin, and that is the electrical cost. So just keeping an eye on that. I did want to look at this. So Caprioli's got a nice Bitcoin macro index here for contraction, expansion phases, slowdown, and recovery. We see that we are back in this expansive ATR range stuff. So this is still on the bullish side of the chart. looks pretty good. It was looking pretty bearish. It hasn't started to paint anything too significant. If it gets below the zero read, basically, yeah, it's not looking good as long as it's confluent with other factors. Let's go ahead and take a look at open interest on the daily as well, just to see if there's anything interesting going on here with open interest. No, there's not. What I will say is, it's still hanging around where this high was at $64,500 to $65,000. This high right here, open interest is marked up. So price is depreciated versus where open interest is. So basically we have a little bit of leverage to wash out of the market. Is it long? Is it short leverage? It remains to be seen. We can get a little bit of an idea based on funding rates, but it's not going to be a great idea. Funding's positive. Long short ratio is probably going to be positive as well. Yeah, quite so. Now, funding rate, long short ratio, and liquidations, I always think are pretty suspect. Open interest, pretty accurate. But for those that know me, I don't really take those numbers as being the most viable metrics being reported by those APIs for the various exchanges. So I do take funding rate, liquidations, long short ratio with a grain of salt. Let's go check on a few other fundamental indicators, though, that have updated here. So there's the crypto quants bull bear cycle indicator. So this is measuring the difference between profit and loss index on the 365-day moving average. So as long as it's above the zero read, you're in a bull. Below it, technically bear. And you'll see that we went from bull to neutral. And you might be thinking like, oh man, that means it's over. No, we're looking for the actual run at this point. You can see that in 2019, it hit full red overheated bull here, and then dumped all the way down to bear, and then right back up into bull. You'll see that it made a lower high in terms of this indicator, but that's just how this works. We already looked at the inter-exchange flow pulse. Nothing interesting there, still showing bull. There is a few others here that I really like this set that I'm going to butcher his name, Ki Youngju put in. Sorry if I said that wrong, my bad. But let's see, what else was I looking at here that I thought was interesting? Maybe it wasn't here. No, we're going to go ahead and look at some derivative-based indicators for our derivative markets, and we're going to take a look at the taker buy-sell ratio. So where is my taker buy-sell ratio? There it is. We're going to zoom in just a tad here because it's a little crazy. Yeah, that's not going to last today. So we see bulls way overbidding in the lower term timeframes. When you start to see this pushing up above, the 1.1 to 1.4 area, even in the lower time frames, because this is the daily, is what it's showing me right now, but it's still a little out of whack. Below the 0.9 on closes usually are indicative of maybe some bidding coming in and sideways price action or a reversal. Right now, we had the below 0.9 off of the actual low over here, but nothing too interesting going on here except the lower term time frame stuff. That'll cool down. Likely bulls max bidding trying to hold up this zone, and they're probably going to get washed if I had to bet. Now that's a little bit different than what the hourly open interest was saying, though. Let's go ahead and take a look at the hourly open interest again. This, by the way, Coinalyze is going to have the same open interest metrics as Crypto Quant. You can get a free Crypto Quant account, and you can look at this chart and many others for free. Yeah, open interest is kind of headed down, so let's see the 15-minute time frame. Yeah, nice little tick up. So nothing too crazy going on here. Hit about 20, just shy of 20 billion. Actually, not really that close on the high yesterday. It's about 19.32 but we were coming from around 20 billion up there. Yeah, so about 20.2 billion, down to 18.4 billion, or even under there at 17.8. So yeah, washed out about $2 billion in open interest. So I'm curious to actually see what are their liquidation metrics for. Yeah, okay. Yeah, just bulls taking it like crazy back here, and at around the lows and the low side structure before that 59,825 was taken out and held as support and taken out to the upside. So yeah, just a little bit of a washout on the hourly, bigger washout. We had a little bit over the weekend bleeding into Monday, so nothing too crazy. Both the bulls and the bears took it on the nose today. Yeah, I thought maybe I'd get something clear with such an outlier read in the lower term time frames. Usually, if Bitcoin's not making headway back to the upside, probably going to see maybe a little bit of a low set and then a rejection or something like that. It's not always the case. On the 15-minute, bulls got to regain 63, 360 from where it is right now to start trying to turn things around. They might have a chance, but maybe a little washout or maybe another leg lower. Above 61, 7 to 8, though, it's looking fine. To at least try to turn it around lower term time frames and head to the upside with the 4 hour looking like 4 is just kind of getting rolling to the downside here more aggressively. Hourly is probably already down there. Yep. Yeah, so it's got a little bit more to go in some of the lower term time frames, but it could see continuation based on the 4 hour. And yeah, so 61.5 is the number to watch here. 12 hour, any kind of 12 hour close below there, we're going to start seeing the 12 hour turn back to the downside, but closes above 61.5, looking okay. So maybe a little bit of a lower term time frame washout, not guaranteed, but definitely painting a picture that way in the early goings for this daily candle. And then we come back to it later. You all have that's where I'm going to end it today. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.